Well, I appreciate that, Jacob. Thank you so much. Are you able to hear me okay?
Yes, I can.
All right, and you're able to see the PowerPoint that I've popped up?
Yep, look
All
good.
right. Well, hey, thanks for having me today. It's an honor. As a CPA, I've been practicing, as indicated, for over 27 years. I've had my practice here in Oklahoma City ever since I moved here, which was over 23 years ago. Active member in the OSCPA. So great to visit with everybody today. Kind of what we're wanting to talk about is, okay, PPP is basically over as of Saturday. So what now? Now we do know that we've got a number of acts, ACTS, that are being discussed this week. If you haven't heard, they're also discussing what's called the Restart Act, which is a loan program that may supersede PPP 2.0, which is then the HEALS Act, which has the second round of PPP. And that's all in a response to the HEROES Act. So there's a lot of mix and sausage being made this week. I will cover some things that just came out yesterday. I'm going to do somewhat might be overview, some of it might be new, some of it might be something you're aware of, but on my YouTube channel, I put out 1 to 2 videos a day. I was doing videos on my YouTube channel for the last 2 years, 1 video a day, and then when this COVID disaster hit, I started increasing my videos only for my clients. I was seeing, probably like you, there was so much new information coming out, I couldn't communicate quick enough with my clients, and so I just started putting together videos and sending links to my videos with how-to and worksheets, and I ended up creating a community service website. What I mean by that is it's separate from my business website that has all free information. You don't enter in an email to get anything, and the reason I'm also mentioning that, which is jjthecpahelp.com, it is different from what you're seeing in the slides. The website in the slides is my business website, but jjthecpahelp.com is a complement to a lot of what we're going to be talking about today, because I have many pages that include instructions or worksheets or Excel spreadsheets or summaries. But with this, I have put out over 450 videos since basically the end of March. And I've got a number of playlists. And the reason I'm saying that is I have CPAs across the country that I talk to on behalf of surgeons. So I've traveled over 50 cities in the last 18 months, of course, all pre-COVID. And through that, I have a lot of CPAs around the country that are also watching my videos because I do a lot of updates or instructional or step-by-step. So, of course, YouTube's all free. So just mentioning that, if you don't mind, if you do check out my YouTube channel, the only plug I'll say, maybe except that then at the end, is love it if you'd subscribe. So we know that the SBA and the Treasury Department unveiled the simpler loan forgiveness application for the Paycheck Protection Program. We know we've got the EZ as well as the regular. And we all know that coming up August 10th, the portal opens with the SBA. So this is going to become something at the forefront of every client we're probably working with, or if you're in the private sector, most likely then maybe the business that you're working with. We do know that the Flexibility Act extended the covered period from 8 weeks to 24 weeks. So that provides a whole new opportunity for achieving full forgiveness. And then with that, also only then 60% of the PPP has to be used for payroll. So if you haven't gone through any of the application, I'd recommend going through the EZ application first, the step-by-step, even if you don't know what the full payroll costs are. If you go through the calculation, I think you'll better understand. If you don't have a full grasp of what the 60% means, it's not a cliff, because you take your payroll cost divided by 60%, and that provides, in essence, the maximum amount that can be forgiven. But it's a little bit of a mind bender until you just go through the calculation, which is very, very straightforward on the EZ, but until you go through that. With the new application process, the SBA reflects that full forgiveness is going to be achieved extremely easy for the self-employed, given that line 31 of their Schedule C is the same as when they applied for it to when they're now applying for forgiveness. And the reason for that is that the amount of the loan is line 31 divided by 12 times 2.5. If the self-employed elects the 24-week period, which is as simple as showing 24-week period as your covered period on the application, then the self-employed takes that same line 31 divided by 12 times 2.5, which is the same calculation, which then achieves full forgiveness. So the EZ app is meant for the self-employed, also the employers that are not going to have any reductions, meaning there's not going to be any haircuts to the PPP forgiveness amount. They too can use the EZ. So I don't have one client that got PPP that let go of one employee or reduced their compensation. So I'm fortunate for that. So all of my clients will be using the EZ. But if you have clients or yourself that employees had to leave, you still can qualify for the EZ as long as you would have certain documentation to show that the employee left on their own, or that they were offered a job and didn't come back even though they were offered that. But when you look at the EZ application, you'll see that there is on page 1 3 very crystal clear ways that someone qualifies for the EZ. So it's not just meant for the self-employed. It does seem to be a sentiment out there that the EZ is only for the self-employed. I don't anticipate, I know it's being discussed right now, I don't anticipate that we are going to see what some are calling a robo across the board under certain dollar amount forgiveness. I think that the borrower, for lack of a better word, of the PPP is going to have to complete some kind of documentation to the bank that then is submitted to the SBA. The Secretary of the Treasury has indicated that there would be a lot of fraud available for that, meaning there's a number of people that probably got the PPP and potentially the wrong amount. Maybe it was based on a gross or a 1099 sent or 1099 received. So I don't think that we are going to be staring down anything easier than the EZ. I see a number of questions or chat popping up. I'm not looking right now because it'll start my complete PowerPoint over. So I'm not going to be able to flip over to that. And I've got a lot to cover, so I'm going to bust through it. Maybe Jacob, if you could keep an eye on the questions, and there might be some duplicate ones, and we can catch those at the end if we need to go a little long. That is fine, but I'm just going to keep going through. August 4th, so yesterday, the SBA issues new FAQs on the SBA PPP loan forgiveness. That just came out yesterday. If you haven't gotten your hands on it, an easy link is at my community service website, jjthecpahelp.com, and I've got it on several pages. I have a PPP page, a PPP forgiveness, a PPP for self-employed forgiveness, and then just an SBA. And all it is information and links, but you'll find these new these new FAQs. But what it covers is forgiveness in general, payroll costs, non-payroll, and there's a ton of examples. In the general section, it basically makes it clear that the self-employed just needs to use the EZ. For someone that doesn't have any employees, use the EZ. Scanned documents are acceptable. The application, they make it clear, even though I felt it was clear before, but they really make it clear the application for forgiveness is due 10 months after the covered period ends. No payments until the forgiveness is determined. Interest does accrue from the date of disbursement and is then due on whatever is not forgiven. These are the 3 sections in the general section. Each bullet point is a question or an FAQ in what came out yesterday. What they made clear is that paid and incurred seems to be a lot of discussion potentially still related to that. I did video after video, so I feel really good. I threw up a whiteboard. I've probably done 20 videos on this paid and incurred. But basically, the SBA makes it very clear that if you have payroll costs that were incurred before the covered period but were paid during the covered period, that is includable in the payroll cost. The partial period calculation for those that have payroll that is not on the biweekly or weekly, they would only need to figure out any kind of partial period calculation on payroll at the end of the covered period, because the paid and incurred really means this. You take your covered period, whatever is paid during that covered period, even if incurred before the covered period, you get to include it. If you paid it after the covered period, as long as it was incurred during the covered period, you get to include it. Now, we do know with the 24 weeks, some of this before and after and partial doesn't matter, because they're going to have plenty of payroll costs even without trying to figure out the paid or incurred portion of it. We do know that those that got the PPP on or before June 4th can use the 8-week period. I don't see any sense in that. I'm sure you might have a different opinion. The only reason is that while we may have clients or yourself and you want to hurry and get it over with, as you know, they're coming out with additional information just like yesterday, always seems to be for the help of us. What I'm telling clients is, why don't we wait till about 10 to 12 weeks into it, and that way we have plenty of payroll. We don't have to worry about a paid and incurred per se. But this definitely makes it clear. It also makes it clear in the FAQs that you will use the gross amount of payroll. There was still some discussion about that over time, but I felt like almost on day one, April 3rd, that was made clear. It's the gross payroll. It's not net of any taxes withheld. They made it clear that lost tips, lost commissions, hazard pay that was actually paid is includable. Health insurance includes only the portion that the employer paid. And then they gave extremely clear examples and definitions for owner compensation in CS, self-employed, and general partners. Again, this is what came out yesterday. So I'm just giving you a quick summary of what's covered in there. I will tell you this, that I felt like the examples in this were phenomenal. They have a section about the non-payroll cost. Each bullet point here is an FAQ, but they then give an example of paid and incurred for non-payroll costs, which is the same. If it was paid or incurred during the covered period, you get to include it. If it was paid during the covered period and incurred before the covered period, you get to include it. On the non-payroll costs incurred before the covered period, you get to include it, but the alternative payroll period, if you have an employee or your or a client or yourself and you're electing reduce that, and you're getting a alternative period as an option, you don't use the alternative period. You can't use the alternative payroll period for non-payroll costs. So your covered period is from when you get the disbursement plus 8 weeks, or if you're doing the 24-week option, disbursement date plus 24 weeks. Leases renewed of leases in place before 2/15 will count for rent, and then utility costs on the utility bill count. So any costs related to the utilities on the utility bill will count. That's covered in the SBA FAQs that came out yesterday. Let's see. Somehow this is not. There we go. There's also a section on loan forgiveness reduction. So they've got a bullet point. I've got a bullet point here for each one. If an employer offers employment to the employee who declines, as long as that's documented, that won't hurt the employer. They discuss seasonal employees, a lot of questions related to that. And then the FTE reduction exception is briefly discussed for employees that made over 100,000. Any reduction below that 100,000 is what's going to come into play. And then they have a huge sections with 3 examples on the reduction in compensation to employees. So of course, the reduction in compensation has to be more than 25% of what their compensation is. And then The reduction is then only that employee's amount that was reduced in excess of the 25%. So there are a lot of calculations that go into that calculation on table 1. They go through some great examples there, and then they talk about the decrease in wages. So you definitely want to check out the new SBA guidelines. So the extension of PPP is August 8th, to be clear. That is that it has to be approved on or before that date. It's not just turning it into the English teacher before midnight and it counts. It needs to have been turned in and approved. And then we have the SBA portal opens August 10th, where the SBA now will receive from the banks the forgiveness applications. Very few banks seem to be actually accepting the forgiveness applications. I know there's a few here in Oklahoma, but I'm interacting with subscribers and followers and clients from around the country, and many are not taking any applications. But nonetheless, they have 100 billion or so that's left. The reason that's important is that it does seem likely that the 100 billion left most likely then would be put into a PPP2 2.0, additional amounts that could be given out even for those that already got it. But again, that's up in the air. The HEALS Act that's being discussed now, coupled with the provisions in the HEROES Act and the Restart Act, we'll see what comes out of all of that. Hopefully this week the senators are to recess on Friday the 7th, so hopefully we have something before then that we can expect. It does seem that Senator Rubio, who heads up the committee that's overseeing this aspect related to the PPP, thinks that they're further ahead on anything else related to stimulus than on the PPP compared to anything else. So what do we do now? So I'm going to let you know this. I purposely have PPP splattered amongst the slides here. So instead of just having half of this all on PPP in a row, I'm putting in a number of other things that we don't want to forget. What I've included here is up to the minute. I do a monthly seminar for Surgent that I write that talks about and includes what has happened in the last minutes, in the last couple of weeks. So a few things to be looking at here is that we probably are aware, but we all got caught up in the July 15th deadline that was not given any further time, as you know, because we're past it. So we went from the urgency of PPP to the urgency of PPP being funded further to the EIDL becoming another option to then all of a sudden now we're facing down starting in June, the realization that they're not going to move the deadline, which they did not. We've probably all taken a deep breath by now. I feel like I finally don't have the bags under my eyes. So what are we looking at now? We don't want to miss out in communicating to our clients the things that don't have anything to do with PPP, EIDL, PUA, the grants, etc. We want to make sure, especially before the next round comes up, that maybe we're digesting this now, getting the communication out to our clients. But we know that the RMD is not required for this year. When the CARES Act first came out, it was only from that point forward. There were a number of individuals. I had a few clients that had already taken their RMDs. It is now allowed for those to go back and give their RMD back and in essence make it an ollie oxen free as though they didn't take an RMD. They have to do that before August 31st. We're in August. I know I have to remind myself sometimes. I feel like I'm at the beginning of May, but it is August 5th. And so we got 26 days to make sure if we have any clients that took any of that. The CARES Act enabled taxpayers with an RMD due in 2020 from the defined benefit plan. So that includes the 401k, the 403b, the IRA, to skip it. They don't have to do double next year. That includes anybody that turned 70 and a half in 19 and had to take their first RMD before April 1st, 2020. The waiver does not extend to the defined benefit plans if you have clients that are specifically in that. If you want to look further into that, you can go to IRS Notice 2020-51, which also answers questions regarding the waiver of the RMDs. Jacob, will they be able to have these slides after, or are we sending them out as a PDF?
Yeah, we went ahead and sent the slides that you sent earlier.
Yeah, perfect.
So they have these, just not the updated ones.
Yeah, perfect. The only thing updated that I did, Jacob, was the slides that I just went over regarding the FAQs that came out yesterday. Everything else would be the same.
Right, correct.
So on the IRS, we have expanded relief related to the coronavirus-related retirement plan withdrawal. So you can look at Notice 2020-50. Really what this comes down to is two things. There are requirements to be able to pull money out. A lot of our clients probably think, well, I can just pull money out for any reason, and now I don't have to pay a 10% penalty. There does have to be evidence that the person was affected by the COVID-19, whether it was they were subject to it or got it, or they had family members, or they experienced financial consequences that are related to that. So those clients that maybe feel like they want to take some money out and there's an opportunity for them to do that, but they're not really affected, well, this is not going to apply to them. What we're looking at here is that wouldn't be subject to the 10% penalty. That is up to $100,000. And then also, if they deem what they're borrowing as a loan, they have until the end of 2021 to pay that back. And then there are provisions that if they borrow it, they can pay it out over 3 years. If you have a client that takes a distribution, counts it as income, but they decide to pay it back later, they would need to amend the return. So part of what we're wanting to look at here is, again, what else is going on that came out of the CARES Act? What else is going on that the IRS has come up with that our clients can take advantage of or be aware of that don't have anything to do with the PPP? IRS has offered tax relief to the Opportunity Zone Fund and investors. What is this relief? You can go to Notice 2020-39, but really what it comes down to is that this is allowing there to be an extended period of time for opportunity zones to actually invest in the opportunity zones, the funds, that is. It also allows the taxpayers to be able to put money in to the Qualified Opportunity Fund for a longer period of time, where we normally know that we've got 180 days, but this is basically allowing more time till the end of this year for somebody to be able to put money into the Opportunity Zone Fund and be able to experience the tax benefits of that, whether they have the sale this year or even at the end of last year. So if you have clients involved in the Qualified Opportunity Zone, you're going to want to potentially take a look at this, or if you have clients that have large sales, because again, this is the only thing that can really help your client from a tax perspective, is they're putting the gain into an opportunity zone. All right, the 2020 tax credits, the EIPS, so the economic injury checks that came out. So not the EIDL, we're talking about the checks that came from the IRS, $1,200 per adult, $2,400. So this is not talking about what we're anticipating. Everybody is anticipating there's going to be another round of this. That may come out of the HEALS Act. Even if it does, I doubt those checks are even distributed until September. But what this is talking about is that if you have a client or you that did not receive some or all of that $1,200, you will have to wait till next year, but there'll be a way that you're accounting for it on your 2020 tax return, that you'd be able to claim the amounts as credits against the 2020 tax liabilities, even though there's no legal constraint on the IRS's ability to issue additional amounts as advance refunds during 2020. So Congress enacted the CARES Act both to provide emergency financial relief to taxpayers on an individual level and boost spending on the national level. The TAS will continue to urge the IRS to provide full amounts to the eligible through 2020 as rapidly as possible, because I don't know about you, but I still actually have a few clients that seemed eligible but still didn't get it. And my understanding is if they haven't gotten it, basically by now, but for sure by October, that they'll then have to account for it on their 2020 tax return. A number of issues that are coming out related to workers being at home. If we have clients that are working or we have businesses that are working near the borders, we may be falling this into it ourselves. And the reason that this is important to pay attention to is that if you have clients or yourself or your business that you're outside of Oklahoma, there's even a bigger chance of this, which is if you have a business, it's located in one state, but now they're allowing employees to work from home. That employee now working at home, if in another state, has opened up nexus issues. It is being discussed that this will be addressed potentially in whatever act is going to come out of what sausage is being made this week. But when we talk about remote employees, we're now looking at a new issue that may come about. So we're going to want to pay attention to this. If you know you have clients that are doing this, you probably want to make sure, is this happening where they're now out of state, that employee that is working from home. Changes to the Small Business PPP loan brackets. The PPP Flexibility Act amends the Paycheck Protection Program to give more time and obtain the forgiveness. Borrowers now have the 24 weeks up from 8 weeks, but note this, if they got the loan June 5th or after, they only can do the 24-week option. With that being said, there is confusion potentially, but the SBA did make it clear. Treasury Secretary as well as the director of the SBA came from their mouths in Congress, before Congress, but it is in writing from the SBA in the guidelines that if somebody does elect the 24-week period, as soon as they hand in their application, though, they're done having to meet the requirements that PPP sets forth. So there was a discussion of, well, I don't know if I want my clients or myself to select the 24-week because now I got to wait 24 weeks and now I have to meet all the requirements of PPP, which is the FTEs as well as the reduction in salaries for that full 24 weeks. SBA made it clear that once you turn in your application, that's when your requirements will end, even if you are doing it before the 24-week. We talked about how it went from 75% to 60%. Again, full forgiveness without restoring the full workforce can be possible because we now have 24 weeks of payroll, but we still have to take a look and see, is there still, though, a reduction in salaries? Was there a reduction in FTEs without exception? So it's very possible that someone has plenty of payroll, but it's with less employees, or it's with employees that did have cut in their compensation. Therefore, there would need to be some calculations still done, and then they wouldn't be eligible for the EZ. Time to pay off the loan extended to 5 years from the original 2, but that's only on loans that were after June 4th. My understanding is the banks are probably going to be working with the recipients of the PPP that don't have a forgiven amount to be able to pay that also over 5 years, but it's not required of them. And then the Act now lets businesses delay paying the payroll tax even if they took the PPP loan. So when the CARES Act came out, it made it clear that you couldn't do two things. You could not take the employee retention credit if you're a recipient of the PPP, and you couldn't delay paying in the Social Security portion of payroll taxes if you were going to get or got the PPP loan. Then later they came out, they being the IRS, and said, well, we'll let you delay paying in payroll taxes up to the date of forgiveness of the PPP. And then the latest is Congress said, you know what, we're going to allow you just, if you want to delay the employer portion of the payroll taxes, you can. Doesn't matter if you got PPP or not, or when it got forgiven. Let's see. How do I go back? Oh, let's see. Changes. Let's see. So the CARES Act allowed employers and the self-employed individuals. I know that this is an area that is easily missed, which is this. that these tax credits that are available and the deferral of paying in these taxes for the Social Security applies to the self-employed. So we're going to see in a little bit, but the sick leave, as well as the extended medical, Family Medical Leave Act, those tax credits, we probably all forgot about them, but the tax credits that came out with the Families First Coronavirus Tax Relief Act, those apply to the self-employed. It's a reduction then of their self-employed taxes, at least the employer portion. The CARES Act prohibited employers from taking advantage of the payroll tax deferral. But what we covered here is that you now have until December 31st, 2020. So they can defer the employer portion of payroll taxes all the way through the end of this year. They don't have to meet any qualifications. They don't have to have a reduction in any of their sales or employees. There are no requirements other than you just elect to push paying in the employer portion of the payroll taxes. We also know that in the Flexibility Act, they introduced 2 additional safe harbors, but the safe harbors that were introduced have to do with the FTEs. Doesn't have anything to do, there are no safe harbors that were added in the Flexibility Act related to a reduction in the employee's salary. Whatever exceptions were available before, those are the same ones that are available. Nothing new was added there. What did not change? It's important to note that there was no change in the maximum loan amount that can be borrowed under the program. It remains at 2.5 times the borrower's 1-month average payroll cost. And then for the self-employed, it's line 31 divided by 12 times 2.5. As present, you probably all know this, but you only can get 1 PPP loan, and you may not apply or receive a second loan. Now, the HEALS Act may provide for the second loan. So the one thing to think through, this one's huge. So if you're busy for a minute talking to a staff, if you're checking an email, I'd really pay attention to this slide. And I'm being kind of serious. I'm looking out for my fellow CPAs here and their staff and their departments that are going to get involved with PPP. So when we provide any service to our clients, right, we still have our ethical duties. We got to be qualified. We have to provide due care considerations. And in the panic of PPP, we're not worried about that. We probably weren't whipping together an engagement letter and defining the scope of what we were doing. We grabbed a hose, we ran in front of our client's house and started helping them put out the fire. We didn't stop and say, hey, here's my invoice, here's what I'm going to charge. Are you sure you want me to stand here and help you put out the fire? At least that's how it was in my practice. So if you're going to be involved in the PPP second round, if you're going to be involved in the PPP forgiveness, you need to ensure that you're qualified. Those that are involved are qualified. It's not just math. You would want to put together an engagement letter to define your services. I want us to remember that we would probably want to let our professional liability insurance be aware that we're doing services that are not tax, it's not audit, it's not bookkeeping, and these are not services typically performed by a CPA. It is a loan. It is a loan until it's considered forgiven. So it's not based on tax forms. It's not based on IRS law or GAAP. None of those things apply. This is under the SBA. The IRS has some influence, but this is related to a loan. It's dealing with banks, the FDIC. If you think about it, our power of attorneys have no jurisdiction with a bank, with the FDIC, with anybody other than the IRS. So if you're going to be representing a client in front of a bank, you probably need to really consider if you even are able to do that and the liability that you're taking on. Determine fees and then taking all risks into account. And then make sure you're not aiding and finding ways to use funds creatively. And I mean that with all due respect, but I know in the very beginning of this, I had a number of videos that you might find entertaining at this point where I was angry in the videos at attorneys, and I'll say it, probably it was CPAs outside of Oklahoma that were trying to find ways for people to get PPP and get it full forgiven. That was pure scam. Oh, we'll fire this person and then give yourself a raise and hire your spouse. And I'm not making any accusations, but what I'm trying to say is that what do we do when we're typically providing tax services? We're trying to find ways legally to help our clients save taxes. We want to approach this in the same way, meaning where's your level of creativity? It needs to be the same for PPP, which is we shouldn't be trying to find ways. Our clients are going to expect us, if we're filling out a PPP loan forgiveness application, to find ways that it's fully forgiven, and they're going to judge you and they're going to judge your abilities. That has an effect on all future services with these clients on whether or not you got full forgiveness. They're going to look at you and go, well, you better keep working until you find full forgiveness. So take these things into account, and that's what an engagement letter can do, is define for the client. They're their numbers. It's their responsibility. But this isn't now just we might have interest and penalties that our client sues us over. This could be a bank. It could be the SBA. It could be the FDIC. It could be your client that comes and sues you later because something was not done properly, correctly, or the wrong amount was determined. So it was quite a while before I even determined I was going to help my clients with the forgiveness, but I've come up with a way that I feel comfortable with it, which starts with the engagement letter. We all probably know this, the CARES Act fixed the glitch related to the bonus depreciation. It was retroactive. You know, the thing to keep in mind is that that bonus depreciation, you know, had a change at the end of 17. And then in 18, it went to the 39-year for qualified improvement property. But now qualified improvement property, all the way back is 15-year property, meaning all the way back to 1/1/18 instead of 39. You may have clients that you didn't take bonus depreciation on. And usually when I'm going around the nation and talking about these issues, the one part where we see a common scratching of our head going, oh yeah, I may still want to look at that, is that maybe you didn't do Section 179, or you wouldn't have your client take bonus depreciation on qualified improvement property, and so you feel like, well, there's nothing for me to go back and change. Well, it can be over 15 years. So you don't have to, if electing to do the 15-year, do bonus depreciation. So what happened here was you can do bonus depreciation on qualified improvement property because it became 15-year property. So we don't want to just only look at, are we doing bonus or not? We'd want to look at whether or not it makes sense to also go back and change any depreciation over the shorter period of time. Now the IRS came out, you can do the 3115, you can do an amended return. With the 3115, you know that you can approach that by going, well, here's the depreciation that I could have took, I didn't take it, so now here's what I'm going to do. This is still on non-residential real property. And here's the biggest thing to know. When I'm doing seminars, I'll usually spend about 30 minutes on this with a whiteboard. Of course, we don't have that time. Qualified improvement property, regardless of what you think, here's what it is. Because remember, there used to be all different kinds of discussions on if it was new, used, none of that matters. Doesn't matter if it's 3 years, doesn't matter if it's a retail or restaurant. It has to be non-residential. But qualified improvement property, period, the end, is non-structural property placed in service after the building was initially placed in service. And the IRS has made it crystal clear in black and white that you can have a building that was placed in service, and the very next day, any non-structural qualified improvements are allowed for bonus depreciation. So you want to look at that carefully and make sure that you're taking into account if you should go back and make any changes there. Let's see, must be having some kind of delay. All right, the tax credits, the employee retention credit. So if you look at what's being discussed right now in the HEALS Act, it may impact it. If you look beyond the Forbes article about the HEALS Act in having some employee retention credit, Right now, what's being proposed is it would be the employee retention credit for third and fourth quarter, period. It wouldn't go back and change anything for first or second quarter. The employee retention credit is gained in two ways. One is that there was a full or part shutdown because of government orders, or there was a more than 50% decrease in the gross income. So this is a period of time between March 13th and December 31st. So what's currently in play, the IRS made clear probably a month later after the CARES Act that if you received a PPP loan, the IRS said, regardless of the origination date, that employer is not eligible for the employee retention credit. So even if they have the employee retention credit that they qualify for because they were shut down or because their gross receipts were down and they qualify, if they later get a PPP, they don't now qualify, in essence, retroactive. Again, as it relates to that, it's a $10,000 wage cap, and the maximum credit then would be $5,000 per employee. But we don't want to forget about these things. We might have clients that didn't qualify for the PPP and or meaning they didn't have wages last year. They didn't have wages during the period of time, or now they do have wages. And or they decided not to take the PPP for whatever reason. The employee retention credit is massively valuable. You can file the 7200 and actually get the IRS to send your client a check. You fax that form 7200 in to get it. We don't want to forget about the paid sick and family leave. I won't go through that, but I did list out here. You know, there's the provision if they have COVID or family with COVID or they're doing quarantine that was recommended by a medical professional. Then there's the $511 per day max up to 10 days if they have it, and then $200 a day up to $2,000 if they're caring for somebody. That's the sick leave. And then employees that can't work because they must care for a child due to the school being closed gets the expanded family medical leave up to 10 weeks, maximum $200. And up to $10,000. So we know as school's getting ready to go back in, I have a client right now that they have 2 employees that have had to quit their jobs because they're going to need to stay home with their child because of virtual. Now, if they had not quit their jobs and they went to a provision of maybe working from home, a provision of maybe working part-time, and my client, the employer, paid them for time being absent or working from home, they potentially would be available to get this Family Medical Leave Act credit. So you definitely want to be taking a look at that. It's not just for what happened during the pandemic. And the SBA has made it clear, as well as the IRS, that even if you took PPP, you can take the sick leave and the expanded Family Medical Leave Act payroll tax credits. You just can't use whatever payroll you're using to achieve those credits for payroll used to achieve forgiveness for PPP. Let's see, I've got a captured here, but we kind of covered that with the FAQs that I added, but I will mention at the bottom, non-taxable PPP funds used are disallowed from being tax deducted. So what's the tax effect? It's supposed to be, and it is, technically, PPP is not considered income, period, the end. But the IRS basically came forward, made it clear that whatever PPP funds are used and forgiven, that will disallow that deduction. So if you have a client and they're an employer with net income of 0 and they receive $20,000 in PPP funds that are forgiven, they potentially will have taxable income of 20 grand, meaning if they have net 0 because they paid all the expenses, including their payroll, and they haven't yet applied for forgiveness and it's still sitting on their balance sheet, once that's fully forgiven, they're going to have taxable income of 20 grand. One of the things to note is that with the self-employed with net income of 0 on Schedule C for 2020 that receives $20,000 in PPP funds that are forgiven, will have taxable income still of 0. It's not a reduction of their expenses, and it's not taxable. So there's definitely an advantage to the self-employed. For the self-employed, the payroll inclusion of the self-employed with a 24-week option, we take Schedule C, divided by 12 times 2.5. Of course, the max that can be included is $100,000 for line 31. And we talked about this in the FAQs. So there'd be no reason for them to worry about rent or utilities or interest if they had line 31 being the same. If they're doing the 8-week option, then they're going to take line 31 divided by 52 weeks times 8 weeks, and then they could include rent, utilities, or interest. By the way, the FAQs did make it clear, if I didn't cover it earlier, that the only interest that can be included for PPP forgiveness is the interest that is secured. So unsecured interest is not included in the interest amount. For the S Corp owner, right? So this is huge, and this is clarified, and it's in the FAQs. And I took issue with the fact that health insurance premiums aren't included in PPP forgiveness. But the reason is that over 2% shareholders of an S Corp are supposed to have the health insurance included in their compensation, period, the end. If you're doing the M1 or you're just having the business, reimburse the S Corp owner, we all know that that's a shortcut that doesn't really work. It's not really how the IRS will allow it. Nonetheless, the only way that the S Corp owner can include their compensation is to take what they made, W-2 wages, not distributions, divided by 12 times 2.5. So their 2019 wages max 100,000. It excludes the health insurance, yes, but that's because the health insurance should be included in the wages. So we would want to be sure that when you're determining the S Corp owner's compensation for 2019, that it does include their compensation plus the health insurance included in box 1, and we would need to add back any pre-tax retirement that was withheld. Now for the C Corp owner, because the C Corp owner, if the C Corp pays the health insurance, it's not included in the wages. Then for a C Corp, it's the owner wages for 2019 divided by 12 times 2.5, plus the employer paid retirement, plus the health insurance. And that's in addition to the 100,000. So this is the same as the S Corp owner, except for the health insurance provision. So you can go to the instructions and see this in black and white. The EIDL versus the EIDG. We know that the grant ran out. The economic injury disaster grant was the 1,000 per employee up to 10,000. But just because it ran out, you know as well as I do, doesn't mean we're stopped dealing with it. So both things are only available for ongoing and operating expenditures. The grant does need to be disclosed on the loan forgiveness application, regardless of when they got the grant. We know that the application for PPP asked for that information for a grant that was between January 31st and April 3rd, but on the application for forgiveness, you're disclosing the grant no matter what. And it will reduce, the SBA made it crystal clear, it will reduce down the forgiveness amount once the SBA reviews it. And then the economic injury disaster grant, the effect on tax deductions is that it will reduce down what can be deducted. Since the beginning of time, anything that the taxpayer receives as a grant, whatever they use it for, they're not able to tax deduct it. It's the same here. IRS backed it up. Unless Congress changes it, it will remain that way. The IRS made it clear it will require an act of Congress. They literally said it in black and white for the PPP to not reduce down the tax deductions. PUA, remember, it is taxable, and then there are differences on what it's paying out state to state, and so you would want to be sure that your clients are looking at that. So in wrapping up, what a term. Oh my gosh, what? Terminating clients? Well, it's a time to reevaluate. We got to remember to put ourselves first as well. Our health matters, our sleep matters, our mental well-being matters. If you ask me, we've been through as CPAs or even those that are CFOs or CEOs heading up companies, you're the internal controller, whatever the case is, we have been through a lot as the CPAs, as the team that's involved with this. It's time to take a deep breath right now and determine, do you have clients that you need to withdraw from? Not to be mean, but are you still qualified? What kind of time are you going to now spend between now and the end of the year and into next year on PPP? Do you have time to do that? Do you want to do that? Is it worth it financially? Do you need to make room for taking on new clients? So I think it's important for us to determine if we need to clean up our client list. Are you taking on new clients? How many clients have stayed with you, right? How many clients are going out of business? How many people don't want to afford your services anymore? How many maybe clients that aren't doing well, you need to reevaluate your services. Maybe you don't need to do their books. They need to do them internally. So do you need to take on new clients? You need to review your fees right now to determine what you need to adjust for when you get to the first of the year. You need to stay on your clients to collect. If their business is down, they can't afford you, then you need to do less. You need them to do more. You need them to go internally. Your health matters, your family matters, your marriage matters, your parenting matters. And as CPAs, we usually are the first one to get in front of the bus. We're the first one to lay down on the tracks. We've been doing that. We got through July 15th. We need to reevaluate things. We need to reevaluate our fees and figure out if we need to make any adjustments there, adjust our services. And then the last thing to note is that the accounting industry is on social media. Social media is not about it's somebody's birthday and we had a cake and you do a post once a month. You really shouldn't even do those unless you're doing a lot of other posts. What social media is it shows your clients, it shows prospects that you're active and you're alive. People now go to social media now before they go to Google and now before they go to your website to see if you're around. So whatever you have on your website, put that information on your social media page. As CPAs, I know we get concerned with putting information out there that we might be held responsible for. Well, you can just share an article. You can help build your brand and your presence by just saying, hey, SBA's got new guidelines, here's a link to it. Your clients are looking for you on social media as well as the future clients. All right, Jacob, what questions? I wasn't able to see any of them. Do you want to go over any of them? Or?
Yeah, let's go over there's a couple. Do we need to request an extension for forgiveness by August 8th?
No, because there is no extension for forgiveness. It's 10 months from when the covered period ends. So if the client is electing a covered period of 8 weeks, it would be 10 months after the 8 weeks is up. Or if it's somebody electing the 24-week, it's 10 months from the end of that covered period. Nope, there are no extensions. That's just what it is.
Okay. And then the easy application, if your loan was more than $2 million, can you use it?
Oh, you know what? Someone better look at the instructions. I don't, off the top of my head, I don't know the answer to that one. I wouldn't be surprised if the answer is no. So I'm sorry I don't have the answer to that, but I bet if they went to page 1 of the easy, I bet it's spelled out pretty bright line there. So good question. I'll include that in a future video.
I think this one's already been answered, but if you used an estimated Schedule C for 2019 and it's different than the actual, the forgiveness application is going to be off the actual, correct?
Correct. And even if they still have an estimate, the SBA is going to require that they use the actual. So another way to say it is they're going to need to file their tax return, their Schedule C, before they file for forgiveness. My understanding is the SBA will be cross-referencing that with the IRS.
Okay, and then do we have to make a formal election for time period 8 versus 24 weeks?
You know, I wish that they had a check the box. So the way that you make the formal election, so to speak, great question, is on the application, when you list your covered period, you'll list whatever period of time. So it sounds, it'd be better for them to go, well, is it 8 weeks or 24 weeks? But the way that it's written now in the instructions is if you're doing the 24 week, then your covered period, you list the 24 weeks. So even for the self-employed, that the 24 week is really irrelevant, the covered period they would list would be disbursement date plus 24 weeks. That then tells the bank and the SBA that they're electing the 24-week period. So it's however you list it on the application is telling if you're doing the 8 or the 24.
Very good. And then the last one we got in was a lease was in place before February 10th, 2020 and renewed during the covered period. Will rents paid during the covered period after the renewal also count?
Absolutely. And the FAQs that came out yesterday make that crystal clear.
Awesome. I think that is all the questions. Man, that was a lot of information. That was really good.
Well, I appreciate it. And I felt like I had to go quick, but I wanted to respect everybody's time. And that's why I wanted to double check that you all had the slides. And then I don't get anything out of you going to YouTube, meaning it's free to you. But I promise you, if you have another question, I've probably done a video on it. I've got a number of playlists. The channel's JJ the CPA. And if you don't mind, if you watch a video and you like it, do hit subscribe. It's probably just, I'm a CPA. I like numbers. I just like to see the number of subscribers. That's probably all I really get out of that.
Yeah, and I mean, it's very helpful. I've got on there and looked at some stuff, and
well, I appreciate it.
I really like it. Really appreciate your information today, JJ. It's the chapter standard that we send gift card to our presenters, so we're going to be sending you an Amazon gift card.
Oh, well, thank you very much. I appreciate that.
Yeah, thank you. And then I also did a random number generator for a participant, and the participant that got a gift card is Janice Wiseman, so we'll be reaching out to you to get your address as well. Thanks everybody for attending, and I look forward to seeing you guys in 2 weeks for our August 20th meeting. Thank you.
Thanks, Jacob.